Hello guys, how are you? The exit polls are out. You must have seen the polls also. Almost all exit polls at the national level, are indicating the present government along with its allies, that the India government will be coming to power. I think the average look like 350 seats, which means it's going to form the government comfortably, and everybody can hope for the policy continuity, those kind of things. So as far as market are concerned, okay. So what is going to happen on Monday? Obviously, market will react to the news optimistically. Obviously, optimistically. Then we'll see what can happen to the Nifty Bank Open. Okay, Nifty Bank being sort of a high beta index, we can look forward to a gap up of say 2%. Okay, anything between 1 to 2%. We'll just discuss as if it opens around 2%. Okay, but remember, this is the reaction to the exit polls on Monday. Okay, actual counting and the results will be out on Tuesday. I think by the time market starts, because the counting starts around 7 o'clock, I think. By the time the market starts, you'll get an idea. And now the assumption is, like for this analysis at least, the assumption is the actual results that come on Tuesday will be aligning with these poll results. There won't be poll outcomes. There won't be any nasty surprises. Okay, let us have that in consideration while analyzing. Okay, now I have Bank Nifty weekly weekly chart of Bank Nifty. Okay, so if you see last week it's in this range, and the weekly low is 48,300 or so. And previously also, when you see, like after it crossed 48,200 sort of resistance, it traded above the 48,200, and last week it closed around 48,990, which is close to 49,000. So let us say it is 49,000. Now we are on the assumption I just told you, we are thinking like it will open 2% plus, which comes to 490 plus 490. 2%, it's close to 1,000 points, which means we are going to open at somewhere around 50,000. Okay. Then the strategies for this thing, for this kind of open is, one thing that needs to be taken care is not to get carried away by the euphoria and get into option side buying. I think one should avoid option side trading, that is option side buy, okay, especially market buying or even the debit spreads. The reason being, in anticipation of the results, like the uncertainty of it, not anticipation, like because of the uncertainty of the outcome, okay, the options on both sides, both call options and put options have gone up. For if you like to hear a technical term, the IVs are already high, so the premiums are already high. So if you are to buy now and hoping to sell even higher, that may be not reasonable. So please avoid option buying. Okay, the premiums are already high, so that leaves you with the option of selling options and trying to get some time decay or completely eating the premium of the whatever options you have sold. Okay, let us have a look at the option chain. I've already opened it for you. I think the font is small, size is small. I think still you can make it out. Okay. See, let us see at this, like these are calls on the left side, puts on the right side. So 49,000 call, if you see. Okay, last week it ended at 1,064. Then if you look at the put, it is like 875. Just look at the premiums. When did you see these kind of premiums last time? This typically happens with major events. Okay, So assuming it goes to 50,000 and stays that way, okay, because the news is positive, there is nothing negative. Otherwise also, okay, either on the GDP front, the print has come out, it is positive. So leaving a lot of data points aside, like a lot of details aside, everything looks positive on the, at least on the national news. Okay, so the a prudent thing to do when market opens tomorrow, selling OTM puts. Okay, selling OTM puts even naked, because of the price, because of the high premium and also the gap we'll have. Okay, from the from the point where it opens and the support levels. Okay, we have just seen the 48,200, 48,300. That region is a good support. So if it opens around 50,000 as we are hoping, okay, just obviously the option prices will change. You can comfortably go down on many strikes, say around 48,200 or 48,300 or even 48,000. Okay, that leaves 2,000 point interval to sell a put. Okay, currently it is 553. Obviously, it will go down in value, but even if it is say like a 200 or 300, and only 3 days are left for the expiry. Okay, remember that we are talking about all these are premiums are on the weekly chart. Okay, and once the news is out, what will happen is either steadily or very suddenly the IVs crash and all the premiums would go down. Okay, so Monday it may open gap up, it may not fall down, it may go a bit and probably settle down higher than the previous close, obviously. Then once the results have come on Tuesday, then results as we just talked about it, if assuming the results would align with the poll outcome, so Tuesday also there is no reason to fall. Okay, either it moves sideways or stays above certain levels. Okay, certain important support levels. So it looks like around the 48,000 area is a safe area, which will be protected in next 2 days and hopefully on Wednesday also, because there is no serious reason to fall. Okay, so selling OTM puts around 48,000 would be a good idea. But one thing you need to remember is that leaves overnight risk of some other news affecting the market. But you can see like yeah, the kind of negative news that should come and affect the bank Nifty by like 4%. Okay, assuming it goes to 50,000 tomorrow, and if it has to come down to 48,000 by expiry, it has to come down drastically by 2,000 points, and in terms of percentage, it is 4%. So I think it is a relatively safe strategy to sell puts. Then on the other side, if it goes to 50,000 as we anticipating, okay, it may not keep going up relentlessly because it has already run up. Then some you can bake in some more upside. Then say another 1,000 points, that comes to 51,000 or 52,000. Okay, between 51,000 to 52,000 or close to 52,000, you can select a call. Okay, obviously the call prices will go up even slightly. So you can sell a call around between 51,000 to 52,000. Say 51,500 or 52,000, whatever premium you get. That makes it the very wide triangle. Most of the premium or all of the premium will be decayed to like about 5 paise of tick size by the time the expiry happens on Wednesday. Okay, that's for the bank Nifty. As I said, don't get carried away by the euphoria and get into buying the options, because they will all these high premiums will lose their value and you lose money. Okay, so don't buy straddles, don't buy strangles, don't buy obviously no naked buying. or even spreads. Debit spreads, I think you'll lose money. Okay, even if it is less, but you'll still lose money. Okay. Right. Then we'll shift to Nifty. More or less, you can plan the trade on the same lines. This is Nifty weekly chart. Okay, so you can see that 22,500 is the pivot around which it has closed on Friday. So we'll just have just 1% gap up, which makes it it may go around to like 22,700, 22,800 area. Then you can just look at the option chain. I'll change this to Nifty currently. Just go to Nifty. Okay, Nifty till 6th June. Just come down and check the option chain. So 22,850, 900. Okay, you can then go back and actually initially taking the OTM put anything below 22,500. I think you can even try 22,500. Anything below 22,500. Say something like 22,300 or 22,100. And if you go below 22,000, it is like even very safer bet, because 21,700, 21,800 is very good support area. Okay. Then on the upside, excuse me. On the upside, okay, last week it touched a new high around about 22,100. So you can just go above that 23,300, 23,500 call, and you can sell that call. That gives you that wide ranged strangle which is sold, and wait for the decay. Okay. But keep in mind, you are doing the naked selling with bigger range. Okay. Unless there is a very serious bad news, I think this should give you money. And as we talked about the bank Nifty, we also do not go for buying in Nifty also. Okay, no option buying. Okay, at least till this weekly expiry is over. By the time the weekly expiries are over, 5th is Bank Nifty, then 6th is Nifty. Then the premiums will cool down and adjust to the then whatever the market conditions are. Then you can start other strategies, whatever you're doing, like naked buying, straddles, strangles, or Davis spreads, those kind of things. Okay. I think we need to look at the daily chart also. Okay, past few days Nifty is bearish, but I don't think tomorrow it will be bearish, and as we talked and Tuesday also, we should be bullish. Okay. Okay, then I'll stop here. If you like the content, please subscribe to the channel and please share it with the like-minded. And I'll really appreciate if you can post a comment on the video. Thank you.